What if I told you that your brain is actively programmed to destroy your wealth? It sounds insane, doesn't it? We are taught that to make money, we need to be brilliant, we need to be fast, we need to predict the future. But what if the smartest people in history didn't become rich by making brilliant decisions, but by doing something completely opposite? What if their true secret was simply learning how to avoid being breathtakingly stupid? In a world obsessed with finding the next big stock, the next huge trend, and the next fast fortune, one quiet billionaire built an empire of staggering wealth, not by hunting for gold, but by obsessively studying human disaster. His name was Charlie Munger, and while the rest of Wall Street was chasing complex theories and chasing quick gains, Munger was running a completely different playbook, a playbook so counterintuitive, so brutally honest, that it completely turns mainstream financial advice upside down. But here is the terrifying truth. If you don't understand the hidden mental trap that Munger spent 50 years exposing, you might be setting your own financial future on fire right now, without even knowing it. Subscribe right now to master the mental models that protect your financial future and hit the notification bell so you never miss an episode. Look around. Why do highly educated, incredibly smart people lose everything in the market? Think about it. Doctors, engineers, corporate CEOs, people with staggering intelligence, routinely blow up their life savings on terrible investments. Why? Because high IQ has almost nothing to do with financial success. In fact, high intelligence can actually be a trap. It gives you a dangerous sense of confidence, an illusion that because you are smart in one area, you must be smart with your money. But the market doesn't care about your degree. The market feeds on human emotion, on greed, on envy, and above all, on overconfidence. Munger realized something early on that changed everything. He noticed that people spend endless hours trying to figure out how to win, but almost zero time figuring out how they lose. We are obsessed with success stories, but completely blind to the silent landmines sitting right in front of us. So Munger did something radical. He inverted the entire problem. Instead of asking, "How can I make Berkshire Hathaway incredibly rich?" he asked a completely different question. What is guaranteed to destroy a great business? And how do we avoid it at all costs? Think about that shift in perspective for a second. It sounds simple, almost too simple. But when you apply this concept of inversion to your life, something profound happens. You stop chasing every shiny object that promises fast wealth. You start looking at the hidden risks, the blind spots, the psychological glitches that make people panic sell at the absolute bottom or buy hyped-up assets right at the top. But identifying risk is only the first step. The real danger lies deep inside a phenomenon Munger called the Lollapalooza effect. What is a Lollapalooza effect? It is that critical moment when multiple psychological biases collide at the exact same time, pulling you into a vortex of terrible judgment. Imagine this. You see a stock skyrocketing. That triggers your fear of missing out. Bias number one. Then you see news anchors and social media gurus talking about how amazing it is. Bias number two, social proof. Then you buy a little bit, it goes up, and your brain tells you that you were a genius. Bias number three, commitment and consistency. Before you realize what is happening, your rational mind completely shuts down. You aren't investing anymore. You are caught in a psychological thunderstorm. This exact psychological storm is what wiped out millions of investors during the dot-com crash, the 2008 housing collapse, and every speculative bubble in human history. Smart people, acting like complete fools, all because their brains were hijacked by these combined triggers. Munger saw this pattern repeating over and over again, across decades, and he decided he would build a mental shield so strong that no market madness could ever break through it. So, how did he do it? How do you protect yourself when the entire world around you is losing its mind over the latest hype? Munger developed a system based on absolute, uncompromising honesty, starting with a concept known as the circle of competence. Imagine drawing a circle on a piece of paper. Inside that circle are the things you truly, deeply understand. Not things you read about in an article 5 minutes ago. Not things your friend told you over dinner. but businesses, industries, and concepts you know inside and out. Outside that circle is everything else. The secret to Munger's success wasn't how big his circle was, it was how fiercely he defined its borders. When a financial analyst would walk into Munger's office, pitching a complex new financial product or a high-tech startup with massive projections, Munger wouldn't try to outsmart them. He wouldn't pretend to understand the buzzwords. He would simply put the deal into an inbox on his desk. A box literally reserved for things that were too hard. And do you know what happened to most deals that came across his desk? 99% of them went straight into that box. Think about the psychological discipline that requires. Wall Street is shouting at you to make a move. The media is telling you that you are missing out on millions. And you sit there, calmly saying, "I don't understand this well enough, so I am doing nothing." Most people view sitting on their hands as a sign of weakness or a lack of ambition. But in the world of high-stakes investing, restraint is the ultimate power move, because here is what happens when you stay strictly inside your circle. You eliminate the unforced errors. You stop making bets on things you cannot evaluate. You stop playing a game where other people have a structural advantage over you. You don't need to hit 100 home runs to build massive, generational wealth. You just need to avoid striking out. And wait patiently for that one, pitch-perfect opportunity to come straight down the middle. But that brings us to another uncomfortable question. If the key to wealth is simply sitting still and waiting for the right moment, why is it so impossibly hard for most people to do? The answer lies in human nature. We are wired for action. In our evolutionary history, sitting still felt dangerous. Action felt like survival. When we see movement, our instinct is to move with the crowd. In modern finance, this manifests as hyperactive trading. Constantly checking prices, chasing daily swings, jumping from one trend to another. But every time you make a move, every time you switch positions, you incur hidden costs. Taxes, fees, slippage, and most importantly, emotional fatigue. Munger and his partner Warren Buffett built Berkshire Hathaway on a foundation of extreme, almost boring patience. They didn't trade. They accumulated. They looked for businesses with what they called an economic moat, a deep, structural advantage that protects a company from competitors, just like a moat protects a medieval castle. Whether it was a dominant brand, a massive network effect, high switching costs for customers, or incredible scale economics. They searched for businesses that could compound cash flow for decades without needing genius management every single day. And once they found one, they bought it, sat back, and let the magic of long-term compounding do the heavy lifting. They realized that the real money isn't made in the buying or the selling. The real money is made in the waiting. Yet, even when you understand moats, even when you stay inside your circle of competence, there is still one fatal trap left. A trap so subtle, so dangerous, that it destroys even experienced investors who think they have everything figured out. That trap is commitment bias, combined with the refusal to destroy your own best ideas. Human beings hate being wrong. Once we publicly express an opinion or invest our hard-earned money into a specific company, project, or asset class, our ego takes over. We actively search for information that confirms we were right and completely ignore every warning sign that says we were wrong. We fall in love with our investments, and in the financial markets. Falling in love with an asset is a fast track to financial disaster. Munger had a brutal rule for himself, a rule that every single person listening to this must adopt if they want to survive in business and life. He said that you are not allowed to have an opinion on a topic, unless you can state the opposing argument better than the people who disagree with you. Read that again. Let that sink in. If you cannot clearly articulate the worst-case scenario for your own investment, if you cannot explain why the bear case might be right, you don't actually have an opinion. You have a belief. And belief without rigorous, objective analysis is just gambling. Munger trained his brain to constantly search for facts that disproved his existing theories. Every single year, he forced himself to re-examine his assumptions and ruthlessly throw away ideas that no longer held up to reality, no matter how much money or time he had already invested in them. This brings us to the ultimate realization, the core mental model that ties this entire strategy together: building wealth. Real, lasting, unshakable wealth is not about adopting complex formulas, trading algorithms, or stress-inducing tactics. It is about building an internal operating system, an intellectual armor, that protects you from your own worst impulses. It is about embracing simplicity, exercising extreme patience, and having the courage to walk away from anything you do not truly understand. When you stop trying to be brilliant and start focusing on being consistently, systematically rational, your perspective on money changes forever. You no longer view the market as a casino, but as a vast landscape of human behavior where discipline is rewarded and impatience is punished. You begin to see that avoiding foolishness is infinitely easier than trying to manufacture genius. So look at your own financial choices right now. Ask yourself the uncomfortable questions. Are you operating inside your true circle of competence? Or are you stepping into areas where you are blind? Are you holding on to an idea simply because your ego refuses to admit a mistake? And most importantly, are you chasing the illusion of fast gains, or are you quietly building a system designed to survive any storm? Mastering your money begins by mastering the mind that spends it. The choice is entirely yours.